Ethical threats or threats to objectivity. There are 5 threats that are to the objectivity, means the person will not be objective, honest, he will be biased. So the 5 threats are self-interest threat, self-review threat, familiarity threat, intimidation threat, and advocacy threat. Now getting into the first one, that is a self-interest threat. Self-interest threat is where the auditor has a financial or other interest that will inappropriately influence the judgment or behavior, financial or an other interest in the client. So this is from an auditor's perspective. So examples of self-interest threat include own shares of that company. For example, auditor is having shares in the company he is auditing. Second is fee dependence, gifts and hospitality. This creates self-interest rate. Loan, business and personal relationship, employment with the client, overdue fees. Now overdue fees is a self-interest because you have a financial interest that a fee is going to be paid by that person. Contingency fees, like fees that is based on the proportion of profit generated or condition attached. Litigation with the client, so client is suing you for something. Now the second threat there is familiarity threat, when the auditor becomes too sympathetic or too trusting of a client and loses the professional skepticism, or where the relationship between the auditor and client go beyond the professional boundaries. Examples of familiarity threat arises because of the long association with the client, personal relationship. Movement of staff between the firm and client, means the audit firm staff is joining the client or the client staff is joining the audit firm. Gifts and hospitality. The third is self-review threat. Self-review threat arises where non-audit work is performed to an audit client and is then subject to an audit. The auditor will unlikely to admit the errors in their own work or may not identify the errors in their own work. The self-review threat arises because of the account preparation, internal audit service provided, tax computation, valuation service. Client staff joins the audit firm. Later that a staff that joined the audit firm is going to review his or her own work, so it will give rise to self-review. Advocacy threat, promoting the position of a client or representing them in some way that would mean that the audit firm is seen to be taking side with the client. Examples include representing the client in court or in any dispute where the matter is material to the financial statement. And the second example is negotiating on the client's behalf of finance. With the amount of material, the audit firm must not act for the audit client in this way. Any request for such service must be politely declined. The matter is not material to the financial statement. The firm should use professionals who are not members of audit team to perform the service, or have the professionals who are not involved in providing a legal service advise the audit team on the service and review any financial statement. Examples of advocacy threat is representing the client, promoting the client, negotiating on the behalf of the client. And the last threat is intimidation threat. Actual or perceived pressure from the client or attempt to exercise undue influence over the assurance provider creates an intimidation threat. Example, actual or threatened litigation between the auditor and audit client, in which case it may be necessary to resign from the engagement. So the situations from same situation mentioned above, for example, that give rise to intimidation threat. Fee dependence. Auditor will be feeling pressurized to pass the certain entries that are not supposed to be because you are dependent for the fee. Personal relationships, audit partner joining the client. And fourth is litigation between the audit firm and the client.